When an entity transfer the financial asset, it may generate servicing asset or servicing liability. It may be in form of collecting payments as they fall due, or remitting principal and interest payment to transferee, or NPAs executing foreclosures, or carrying out accounting and administrative tasks. So all these assets and liabilities, those are generated in form of servicing at the time of transfer of financial assets, are not financial instruments, because these can be settled only by providing the services. So in this case, if the fee received for servicing the asset or liability is more than the compensation for the servicing, in that case, we need to recognize it as a servicing asset for the service, right? Because the fees expected to be received is more than the cost of providing the service. In opposite side, if the fee to be received is not expected to compensate for performing the servicing, in that case we need to recognize servicing liability for service obligation, because the fee is lesser as compared to the cost of servicing of it. And if the benefit of servicing exactly compensate the cost, in that case we need not to do anything, because there is no servicing asset or servicing liability, as the fair value of service contract is zero. And servicing assets and servicing liabilities are subject to measurement requirement of Ind AS 113 at the initial recognition, and subsequent measurement at FVTPL is precluded, because fair value option is available to the financial items also, and servicing assets and liabilities are not financial instruments. Apart from it, there is no servicing liability to the extent of continuing involvement of the asset. For example, if the asset pre-transaction was rupees 100 and the continuing involvement in the asset after the transaction was 70, the transferor would recognize a servicing liability for the 30 only that has been de-recognized. It would not recognize a servicing liability for rupees 70 which is not de-recognized by the entity. So this is all about the servicing assets and liabilities.